All right, y'all, I'm Brian with BK Trading Academy, professional trader. And I want to tell you guys, if you're trading Forex, September 2025 and beyond is the last time we're going to start guessing on our entries. There are a number of ways that we can be confident in taking entry. And so in this video, I'm going to talk about the Commitment of Traders Report. It is a weekly publication report from the US government that tells us how many positions that the big banks and the large companies and hedge funds have with their currency. So if you have a report like that, wouldn't you want to trade with it? We're talking about big companies, large institutions that are trading trillions of dollars each day in the Forex market. Why does this work? How to use it is what I'm going to talk about. And even though the report is reflected from a few days prior and we get that report on a Friday, why it still works, especially for swing traders. Let's get into it.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
All right, guys, so first we're looking at the CFTC.gov site. This is the US government site I was talking about. It stands for Commodity Futures Trading Commissions. Now, I have another YouTube. You look back here. I'm going to post it here and also leave it in the description if you want to take it from the beginning. But simply, you want to go to Commitment of Traders right here. And then you want to scroll down right here where it says Current Legacy Reports, go to short format. And if you do a quick search here, Command Find if you have a Mac, and you simply type in, let's say JPY, hit enter, it's going to show you how many longs and shorts that the big institutions have for JPY. So for example, we see the Japanese yen. We see for the non-commercial and commercial, we have their longs right here, and we have their shorts here. So they're hedging all the time. Now, typically you want to go on the side that has the most. For example, they have 180,000 longs, they have 89,000 shorts. Now, we don't just trade one currency, we trade two currencies. Again, I suggest you go to the other video here that I'm going to link in the description below and even in the comment section. It looks like this right here. This will take you from the absolute beginning, right? So we're not going to look at this here. We're going to look at a better site that makes this a lot better and cleaner. And this site is Bar Chart. So the very first thing we're going to do, we're looking at the legacy commitments of traders' net positions. It looks a lot cleaner, right? So we're going to look at the non-commercial, which are the large speculators here. And if you scroll down, we're going to look at EURJPY as our test subject. I want you to follow this trade with me, okay? Now remember, we need to look at fundamentals and we have some big news coming up on Wednesday. All right, so I show you how to get to this chart here and how these numbers are calculated in the previous video. But for now, I'm going to show you, we're going to look at the Japanese yen and we're going to look at the euro. This is a green number. This tells us that the big banks and institutions have 18,385 contracts for longs with the yen. And the euro has 6,085 long contracts. Now, when you have two long currencies and they're trading against each other, the first one is euro, right? The first one is euro. That's 6,085. So I'm going to bring my calculator on the screen here. We're going to look at 6,085 longs, right? So I'm just going to put 6,085 longs. And then the yen has 18,385 longs. But since they're working against each other, I'm going to actually subtract 18,385 and I'll hit equal. That means we have a negative of 12,300. So whenever you have a negative, that means you're saying that, hey, price should be heading down, right? Because Japanese yen, their longs is downward because it's the second currency in the pair. Euro is the first currency in the pair and it's buys, so you're going to head up, okay? So longs for yen is down because it's the second currency. Buy or long for euro is up because it's the first currency. Again, I explained this in detail in the first video, and we also have a COT course that goes really in depth, a lifetime course that you will find in our website in the description as well. So now that I see I have 12,300 short positions overall, I want EURJPY to drop. Now let's go to the chart here, and I'm looking on the weekly time frame. So remember, the very first thing we want to look at is high impact news. So if I go to forexfactory.com, I see that we have high impact news on Wednesday, which is tomorrow from the date of this video. And we have FOMC. We have some interest rates that are being anticipated, I believe, is 0.25% for the US dollar. And so this can even affect other currencies such as the euro and JPY. So you want to trade cautiously. Now, in a normal environment without high impact news, we should see a drop automatically because we're looking at the big banks and institutions, their numbers. We're looking at it. So there's no guessing at all, right? Remember, second thing is market structure. So I've identified my resistance level here. I can even draw this all the way across. This is a huge supply level here. And when I say huge, what I mean is that when I look back here, this was back in June or July of 2024, and now price has repeated itself here in July of this year, 2025. We created a neck right here, and we have a double top right here. Okay, so now price is currently here as of September 2025. And in a normal environment without any high impact news, any tariffs, any wars, anything like that, we should see price head down. Now we know that a double top simply means that we have a reversal. Okay, a double bottom means we have a reversal. So if we have a double top, this usually means that we have a reversal happening, and not just any reversal, a reversal in trend. And why is that key? Because if I look left, look how high price is. Right? We can see EURJPY has been climbing for weeks and weeks and weeks and months and months and months, right? So it is highly, highly overbought, because look, I'm looking at the weekly time frame. I'm looking at the higher point of view on the weekly time frame. So overall, it is highly overbought. It just makes sense that whenever something's overbought, we're going to have a drop, and not only just a drop, a possible trend reversal, right? So I'm looking at swing trading. This is just from week to week. Now, oftentimes I get questions saying like, hey, since the commitment of traders report is released to the US government on Tuesday, we don't get it till Friday. How is that relevant? That's old data. In actuality, it is not old data, because it takes a long time for price to pick up here. As I look at these numbers and I have a negative 12,300, I see that we have 12,300 contracts to the short side. Price should be dropping. And if I look at the same report the following week, and if this number increases, and let's say negative 20,000, we can say that, hey, price is starting to shoot down. And if the following week after that, let's say it is negative 30,000, you can see how we're now starting to reverse our trend. So I teach you how to read this report and how to look at the report week after week after week from its progression. Now, last week, EURJPY was a buy. And if we look here, we had a buy at 7,779. That means that last week we were looking to buy. So now all of a sudden this week we have a complete trend reversal, not only buying, but you can see how this positive number shot down to negative. So we should see price start to shoot down, and it takes time. It's like a snowball effect, right? We had a buy last week and now starting to reverse pretty aggressively. So now we're going to start seeing sellers pick up, and this requires patience. You may not see that sell right away today or tomorrow, but it's going to take time. And this is where the money is. I always say that swing trading is where the money is, because you get to participate where the large banks and institutions are trading. So guys, let me know in the comments if this makes sense, if you're interested in learning this. And guys, we're looking at hard data. We've looked at price action that tells us, hey, we're at a double top, so price should be reversing sometime soon. We're at a resistance level. And then we looked at the commitment of traders report, where we calculated that, hey, sellers are coming in for EURJPY 12,300. And then we're also looking at high impact news. So I want us to watch this carefully, guys. Now, remember, we have high impact news tomorrow, which can completely take this out. But we're going to watch this together. I want you guys to comment, and let's just watch this together, guys. If you have questions, let me know in the comment section. And if you guys are serious about the commitment of traders report, you want to learn more about it, bktradingacademy.com. And if you go to products right here, you will see where it says commitment of traders report right here. It is a lifetime course where I provide videos of step-by-step of how to understand these numbers, how to acquire it, and apply this to your trading. It also includes market structure, how to understand and find your key levels, and you accompany that with every single thing together and how to trade like the big institutions. Guys, please thumbs up this video. In the meantime, guys, I will see you in the next video. God bless you.